This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Portfolio investors sold record volumes of petroleum last week after OPEC surprised the market by announcing plans to increase production starting from the fourth quarter of 2024. Hedge funds and other money managers sold the equivalent of 194 million barrels in the six most important futures and options contracts over the 7 days ending on June 4. Fund sales were the fastest for any week since at least 2013, when the U.S. Commodity Futures Trading Commission and ICE Futures Europe began publishing data in the current format.
Saudi crude oil exports to China will fall in July for a third straight month to about 36 million barrels amid plant maintenance and as some refiners opted for other sources of cheaper oil, several trade sources said on Tuesday. July exports are down from about 39 million barrels in June, possibly the lowest levels for the year, the sources said. One state refiner and a private refiner cut nominations for Saudi crude in July versus June, they added. Chinese refiners are cutting imports from Saudi Arabia, the world's top exporter and China's number 2 supplier, due to high term prices for Saudi crude and weak refining margins, the sources said.
Moving on to the top news in the energy sector.
New tax credit rules unveiled by Brazil's government are expected to lead to a rise in gasoline and diesel prices in the country, an energy lobby said on Monday, estimating their impact on fuel distributors to reach 10 billion reais, $1.86 billion. President Luiz Inácio Lula da Silva last week published an executive order with news story for the use of credits by companies related to the federal PIS/COFINS taxes, triggering a news story from the most affected industries. As companies look to offset the impact of the measure, energy lobby IBP said gasoline prices may rise 4% to 7% for consumers, or up to 0.36 real per litre, while diesel prices were seen rising 1% to 4%, or as much as 0.23 real per litre.
Oil prices traded lower on Tuesday, as investors waited for key U.S. and China CPI data as well as the outcome of the Federal Reserve's policy meeting to glean a clearer picture of where inflation is heading and how that will affect fuel demand. Brent crude futures fell 13 cents, or 0.16%, to $81.50 per barrel by 0613 GMT, and U.S. West Texas Intermediate crude futures slipped 7 cents, or 0.04%, to $77.67. Prices had climbed about 3% to a one-week high on Monday, buoyed by expectations that the Northern Hemisphere summer vacation season will boost fuel demand this summer, a gain some analysts said was likely to be short-lived given the prospect of higher interest rates remained. Next, we have the top news in metal markets. Vietnam is expected to allow companies to import gold for the first time in over a decade, as it aims to bridge the widening gap between local prices and international benchmarks, an industry official told Reuters. The Vietnam Gold Traders Association, VGTA, has been in protracted talks with the government over measures to correct the imbalance in supply and demand of gold. Nguyen Trung Con, the association's vice chair, said. Vietnam's government virtually took full control of imports and local bullion sales in 2012, with certain large companies allowed to import provided they repurposed it as jewelry for exports.
Most non-ferrous metals fell on Tuesday as a weaker yuan reduced the purchasing power of Chinese buyers, while high inventories and weak demand pressured aluminium prices. 3-month copper on the London Metal Exchange fell 1.3% to $9,773 per metric ton by 0806 GMT, while the most traded July copper contract on the Shanghai Futures Exchange dropped 2.3% to 79,870 yuan, $11,010.17 a ton. China's yuan fell against the US dollar to its lowest in nearly 7 months, as investors returned from a long weekend break to play catch-up with broad greenback strength in overseas markets.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures reversed course to fall on Tuesday on weaker rival oils and lower export expectations in June, although a weaker ringgit limited losses. The benchmark palm oil contract for August delivery on the Bursa Malaysia Derivatives Exchange fell 14 ringgit, or 0.36%, to 3,905 ringgit, $827.33, a metric ton by midday break. Dalian's most active soy oil contract slid 1.23%, while its palm oil contract lost 2.38%, as of 0535 GMT. Soy oil prices on the Chicago Board of Trade slipped 0.69%. Palm oil is affected by price movements in related oils as they compete for a share in the global vegetable oils market.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.